make sure I'm not muted. Got my screen, got some volume. Everybody's like, man, it's too soon. Mark, not yet. Let's just check news. Today's Tuesday, December 9th. I already have my Ninja Trader crashing. Always a good time. Tuesday, December 9th. And we are looking for high impact news so that we can take a moment away from the market, relax, and not get caught up on anything. 10 a.m., guys. Jolt's job openings are coming. And because it is high impact, it could disrupt the patterns. And that's really all we do, guys, is patterns. I teach you to read indicators. Man, I wish we could get some more people in here. Here they come. The hope for today, guys, we're going to do a lot of live trading. We're going to look at your charts and give all the feedback you could ever hope for. But yesterday, we did a very extensive 101. If you need the 101 lessons, if you need the very basic lessons, if you need the lessons that teach you how to recognize the highest probability trend trade available, watch the first hour. It's been the same first hour for 6 years, guys. Today we're going to focus more on live trades. Today we're going to focus more on being in the market, looking for opportunities, looking for advantages to turn them into a trade. Such advantages would be this right here. Having a market with strong triggers, meaning that the triggers are separated in the direction of the trend. It's really a pretty simple concept. With the background green, my triggers are green. There's space between the two as they go up. If my background is red, the triggers are red. There's space between the two as they go down. That's strong triggers. That's your first advantage. That is the advantage that lets you know that the odds are favorable for the market to continue down. Your second advantage is the idea of not trading into areas that can stop a market, not trading directly into termination conditions. That second rule is, again, it's just a pattern, it's a look, it's a recipe. You should learn the phrase, if price reaches an area, if the market reaches Fibonacci resistance, if the market reaches Fibonacci support, divergence highs, yellow 1-to-1s, when price reaches a line, count your triggers. That's it. That's all there is to it. If none of your triggers have made it through the area, that area is what we call a termination condition. A termination condition can stop a market. It can create a reversal. It can create a big untradeable bounce, or it could break. You'll know it's breaking because your trigger lines will tell you the story. I'm going to give you this picture. If two of your trigger lines break through, that area has the potential to break, but that is not your best look. That is not the highest probability look to trade the potential of the area to break, but the potential is there. It is when three of your trigger lines get above a line, three of your trigger lines get below a line, both small, one large. As long as that separation is present, that momentum is in place, this area has the potential to break, and that's your best look for a breakout. When all four trigger lines get through an area, the area is considered broken, guys, and not until all four trigger lines get through. Price peeking its head is not a break. Three triggers is not a break. A clear path is only achieved when all four triggers make it through the area. You guys with me so far? First, we're going to have momentum, separation. It's just one look. Then we're going to have a clear path, or at least the potential to break. And then finally, guys, we're going to use a smaller, faster chart. We're going to define our entry. The idea of momentum is a large chart, rule number one. The idea of not trading directly into areas is a large chart, rule number two. Your small chart is just defining your entry pattern. Your small chart is giving you a way to take the large chart advantages and turn them into an entry. And there are entries both directions. The rules are the same either way, guys. A reversal bar will begin the pullback on your smaller, faster chart. When everything says down, you're going to wait for the market to go up. You're going to know where the market is most likely to retrace using large and synthetic triggers. You're going to know where the market is most likely to bounce using the areas inside. That's your high probability trend trade short for a long. Reversal bar begins the pullback. Trigger lines define the retracement. Areas define the most likely area for a bounce. Your limit order waits right at the area inside. Guys, it is one look for the entry pattern. So we're going to take momentum. We're going to take a clear path, or at least that 3 trigger potential to break. And if there is a pullback, look at that, to an area inside of triggers, guys, that's your trade. That's the S&P. That's live right now. If you are an S&P trader, you have no reason to not be in that trade because it fits a plan. If you go back just a little bit, 2 triggers through, same entry pattern, I bet. Pull back to an area right inside of the trigger range. And guys, you can go back historically 10 days with your software, and every time you see one of those tails, circle it. What does it look like? Is it your entry? So this is what we're going to do today, guys. We're going to use NinjaTrader. We'll trade the S&P live. We'll use the entry rules from the KISS plan. The KISS plan is what I give out every day, guys. And the KISS plan is designed to optimize your chances of success. The KISS plan teaches you to read your indicators. The KISS plan sets you up to build your confidence, your trust in a methodology that you can prove wins more than it loses. It only takes the 2 charts, and it really only has 3 rules for entry. I need strong triggers, I need no termination conditions, and I need to be able to define that entry. Guys, during the day today, if these rules are met while we're watching live, in the sake of information and education, we will pull the trigger and we will manage it according to the plan that I'm giving you. We will also, if the rules are met for that 3 triggers through potential to break, we will pull the trigger there as well. Guys, this is an educational room. I want you to see what it looks like when rules are met. I want you to see what it looks like when it's time to enter, and we will discuss management. We'll also discuss expectations. With all of this momentum and the potential to break, we're looking for the market to push down to the next key area. When it's only potential, this divergence might mess up our good time. So we're going to see what happens there. Rules are no longer met when divergence prints. We're also going to look at Trading View. Holy drop, Batman. We'll watch the NASDAQ in Trading View. And once again, I'm going to give you guys a plan. And the plan revolves around only 2 charts, only 3 rules for entry. We will define on the large chart, let me find my picture, the direction of the market using the small triggers. They're either up or down. We will define that we have room to targets by making sure that price has not reached a line on the large or small charts. We will manage it according to where price is in relationship to those triggers. If we are left of the triggers, it's strong. We may hold for bigger moves. If we are inside of the triggers, we'll get paid at areas and get to break even. If we are on the weak side of the triggers, so the right side of the triggers, we'll get paid right at areas. Guys, everything that you need to be successful with the software is handed to you daily. Everything that you need to have a plan that you can prove wins more than it loses is handed to you daily. Both of the plans are in the room. All we're going to do is trade patterns. We are going to look at, stop that, trend trades on TradingView. That's exactly what they look like. This spreadsheet has a place for your pictures and a trade tracking sheet for you. So if you're one of my TradingView people, this is your spreadsheet for study. If you're one of my NinjaTrader people, same thing. There's your rules. There's examples of what they look like, place for your pictures, and a way to track. Guys, the way to get to where you want to be in this room, really as a day trader, there's a very simple path, and I'm going to encourage you to stay on that path today. Learn the trigger line and Fibonacci rules for when it's okay to trade, because when you can identify momentum through strong triggers, when you can identify a clear path by counting the triggers at areas, when you can define your entry, you have a high probability trade. you have a trade that you can prove gives you the potential to win up to 70 to 80% of the time. Your job is to learn it, to trust it, to execute it without hesitation. Simulator allows you to do that. So simulate, practice, get your reps in. Post in the room, guys. Tell me what you see. Tell me what you're doing. Tell me why you did it. I will go back to those three concepts, momentum, path, and entry, on every chart posted in the room. So it's imperative, if you really want to get the most out of this classroom, you need to start taking pictures. You need to start putting them in the room. Nobody ever got great at something sitting in the shadows listening to a lecture, guys. Turn it into a discussion. Define the momentum on your chart. Point it out. Let me know what you were working with. Tell me what you thought about termination conditions. Was it a termination? Was it the potential, or was it a clear path? And finally, tell me why you entered. Tell me where you entered. Tell me how you managed. Guys, I'm not going to be the trade police today. What I'm going to do is I'm going to say you did have these advantages working for you. Your chart read was perfect. Or I'm going to say, hey, you made a little mistake on your chart read. Let's make sure that we can clear that up so you don't go into a trade believing you have advantages that aren't present. Simulate, practice, post. The people that post the most get to where they want to be the fastest. And then the second thing is simplify, guys. The plans that I put in the room are the KISS plans. They're designed to optimize your chances of success. They're designed to teach you to read your indicators because, guys, reading your indicators is 90% of your day. Reading your indicators is going to account for the majority of everything you do. And if you keep it simple with a checklist, using 3 rules on only 2 charts, you can build a foundation that allows you to learn to read your indicators, to recognize advantages. Those advantages become your trade. That 90% of the day is doing nothing. That 10% is actually trading. Here's the great thing. If you keep it focused and simple in the beginning, guys, you're going to use those 3 advantages, and you're going to understand where the market is likely to continue. Continue with the large chart trend. Continue with the large chart momentum. Continue with the large chart clear path or the potential to break. That becomes your entries. You're also going to understand where the market is likely to go. This is going to help you get the most out of trades, using those advantages, creating expectations, developing the trust to hold for the bigger moves when it makes sense. And then finally, you're going to know where the market is likely to stop. And guys, likely to stop areas are those lines on a large chart with none of the triggers through. And this is your giant red flag that says, hey, you've lost your advantages. Trading into that area is more likely to lose than it wins. So if you go through these 3 concepts, if you take, I'm going to say, 10 trading days, 2 weeks in the market, to be able to identify momentum without hesitation, to be able to define that clear path without question, and to be able to define that entry, understanding exactly where your limit order goes, guys, you're going to have everything that you need to be successful. You're going to have everything that you need to see more, to do more. You're going to be reading your indicators. So what we're going to do today is we're going to watch Ninja Trader. We're going to watch TradingView, and we're going to keep it as simple as I know how to keep it, guys. This is your TradingView read. The small triggers are down. My direction is down. How easy is that? Means I'm only looking for short trades. Can you guys give me a why if you're on TradingView and that makes sense? When the triggers are down, my highest chance of success comes from only looking for short trades. That's the first step. The second step, from where the market is trading, from where my potential entry is coming from, do I have room to targets? And we're just going to say, is there room to make money? If the answer is yes, on the large chart, go to the 1-minute chart and look for an entry. Not too terribly difficult, right? It's going down. I've got room to trouble. Go look for an entry. Guys, that's how easy it is to read a large chart. Well, on your small chart, we're going to focus on an entry called a trend trade entry, which means that we're going with the direction, that we're going with the room. and it's pretty easy to define. On the small chart, a trend trade means that we are going to buy or sell a retracement on the small chart. Remember, the large chart's going up. The large chart has room to trouble. We're going to let the small chart pull deeper, that little retracement that fights everything. We're going to let it pull to an area, to one-to-ones, to a mid-band, or to one of these zones. When it gets there, this is where the patience of the methodology pays dividends. Your entry is an up bar that closes above the small triggers for a long trade, or a down bar that closes below the small triggers for a short trade. Guys, your entry will look the exact same every time you take one because that is the rules. So the triggers are down. I have room to trouble, and here we go. If this bar closes below those small triggers, I have a trend trade short. If it does not, and we'll know in 10 seconds, I have to sit on my hands and really wait for it to get to a higher area. But once I'm at that higher area, I'll find myself inside of these zones, which means I no longer have room. Are you guys with me? We're watching it happen live right now. If this bar closes below the small triggers and below the treble, that's my pullback. That'll be my close below. We'll see if we can get the market down to 25,596.50. Are there any questions about the trend trade entry? If we execute an entry, our stop will go above the pivot high. So this is our plan today. On NinjaTrader, if the rules are met for the high probability trend trade, we'll take it. If they're met for the 50-50, we'll take it. On TradingView, if it's met for the trend trade, we'll take it. And here's the other side of trading. If they're not met, we will absolutely, positively refuse to take that trade. Whoops. There's our close below, but it didn't have anywhere to go, which means that's not my trade. Because the checklist says, here we go, 15 minute, not trading into areas, 1 minute, not trading into areas, room to targets, close below. No room to targets, guys. Sometimes it's not your money. Hands in pockets, that's it. So that's going to be TradingView. On NinjaTrader, we're going to go through the same thing. I have momentum. My path is clear. Whoops, wrong one. If the market pulls back to this area inside of those trigger lines, we will be in the highest probability trend trade ever. First, it's momentum. Then it's making sure price is not reached, Fibonacci support, making sure triggers are below the previous problem. My rules say my entry comes from an area inside of triggers. Pretty cool, right? Calling our shots. The only thing that we don't have going on for us right now is the entry. We have the advantages. We've defined our entry spot. All we need now is for the market to come get us. Guys, if they come get us, we will manage it per the KISS plan. We will put our initial stop where the market should not go. 4 to 5 ticks above these trigger lines. We will set our targets at $100 and $200. Rather than focusing on the big moves, we're going to learn how to get paid. If I get a reversal bar, one of these bad boys pointing down in the direction of my trade, I'll reduce my risk behind that reversal bar. If our first target is hit, we'll go break even on the trade and see if they hit the second. That's the KISS plan. Now, what I want from you guys is to ask, hey Mark, what do you mean momentum? How do I know I have momentum? If you're not sure, Mark, why are you calling this a clear path? I see that blue line. Talk to me if you have that question. How did you know to put a limit order just below resistance inside of triggers? Well, because that's the point most likely to bounce. Guys, the only thing I'm not guaranteed is an entry. So what we're going to do, we'll just come back to it. It's simulator, right? Who cares? We're going to come through and we're going to start looking at some of the pictures that are posted in the room. Trend trade, triggers down. There we go. Price in transition, know how to manage it. Space to the next area. Small chart pulls back to the zones, to the mid bands. There's your close below. There's your entry. There's your profits at trouble. Victor, the perfect trade. Do you guys see how everything on this chart is exactly as we just described from the checklist? This is a trade that you guys are proving typically wins about 70% of the time. Victor, the execution is flawless. First it's down, then it's room, then it's a pullback to an area, then it's a down bar that finishes below. And you can see that he waits for it to finish because his entry is on the next bar. Great job, Victor. Did they get us? Not yet. We're still rooting for him though, right? Large chart hasn't changed at all. Don't get caught up in fluctuations, guys. There may be a million on that 5-1 chart. Triggers are down. Room to trouble. Pull back to the area. Same entry. Same money. Paul, great job. Guys, there's a reason this trade looks exactly like this trade. It's because, my friends, it fits the plan that you can prove wins more than it loses. It fits the plan that provides an edge. It fits the plan that gives you the ability, the potential to win up to 70% of your trades. There's a million ways to use the software, guys. That's the highest probability way I know to teach you. Learn that one, you'll start to see the rest of them. 15-minute, we're up. There was room to trouble. And there's your pullback to the area. There's your close above, Paul. There's your target reached. You missed it. You missed your trade, guys. Having the confidence in your methodology, catching the first entry, not the, oh my gosh, I missed the entry. That was the one right there. And it went right to where it was supposed to go. And then once the target is hit, the market pulls back. It's already done what it's going to do, and it continues down. So getting in time has a lot to do with it. Taking the first entry is almost always the best entry. The more the market is indecisive, I think the less likely these are to work. So, Paul, it was a great read, just a little bit late. And here we go. All the momentum, room to Fibonacci. There's the pullback to the area inside of triggers. There's profits being taken right at trouble. Great job, Pete. Nice trade. There is all the momentum. No room in this momentum trade. There's just nowhere to go. And it bounces back and it turns into a trend trade, right? You took a shot, not a lot of room. 1 minute area did everything we would expect it to do, creates the bounce, and you say, well, then I'll just take the trend trade. You can't stop me. And sure enough, money. And then you've got a clear path to jump in with that momentum all the way up to Fibonacci resistance. Beautiful trading, Pete. I think that one, if you're going to take it so close, it's okay to let it be a small winner. Jumping in below trouble with momentum. Momentum fails, you choose to exit, turns into a trend trade, and you're like, you know, it doesn't feel right. So you get in below trouble and carry it down. You get stuck on which one, Sergio? Right there, just jumping in with nowhere to go. You see lots of fibs. Sometimes there are lots of fibs. This one? Is that the one we're talking about, Sergio? Cool. So watch this. Sorry, hold on. Odds favorable momentum. There's your first one. I think there's the second one he took. See the potential to break? See the potential to break? So what Pete's doing is Pete's trading the potential to break. So 50-25. 50-25. He's letting strong triggers, letting the smalls absolutely smash through, and then he's looking for his opportunity. And then he's trading up to, hold on, 59.75. With all the momentum, he's out at 59.75. So Sergio, Pete trades different. Pete doesn't take high probability trend trades. Pete trades a lot of potential. Pete trades a lot of potential to break. It's not a high probability trend trade, and in most cases, it's not even a medium probability trend trade. What it is Pete's ability through all of his study to say when triggers are this strong, I'll take a shot at the trend trade. When triggers are this strong, I'll just jump in with room to trouble. And they're not always trend trades with Pete. So one of the things, guys, you've got to not do in this room is look at somebody else's chart and try to trade like them. You can't look at somebody else's chart and assume that you know what they're thinking or what they're doing. Everybody should have their own trading plan, an individual trading plan, a plan that suits your needs. Yeah, Sergio, he's not trading the rules. He's got his own rules. The rules that I teach, they may be going without us. The rules that I teach are the very basic to teach you to read your indicators. And once you can read your indicators, you start finding trades like this. You start finding trades like this because you've put enough time in the market to know that with all of this momentum, when it gets below those fibs, it's got a really good chance of making the next fib. Does that make sense? It's not a guarantee. But Pete says with all of this momentum and the potential to break, there's a really good chance they're going to push down to the next area. The same thing he said right here. With all of that momentum and the potential to break, it could go down. And when it didn't, he said, dang it, it didn't go down. I'll wait to get below the next area. And there it is right there. So, Sergio, you don't have to trade into fibs. Did you know? They may come get us again. Did you know, Sergio, that the futures market, specifically NASDAQ, the market that you trade, exchanges about $269 million a day? If you have to wait 30 minutes in between trades, it's okay. If you have to wait 40 minutes, 50 minutes, an hour and a half in between trades, it's okay. The likelihood of you not getting your rules met throughout the day are pretty slim. Does that make sense? But what happens? You start getting bored. You start seeing the market move quick. You want to be in that move. You want to get in. You don't care if your rules are met. You just want to make some money. It's 9:30 a.m. Why am I not rich? 90% of your day, Sergio, is doing nothing. That picture from this morning. So check it out. Let me open it up. Where'd it go? Dang it. I don't want to download it. I want to open in browser. There we go. That's not it. Hold on. Let me click on a link. I got this now, dagnabbit. I don't have momentum, right? I'm below the synthetics. I'm below. I don't have any momentum. I don't have rules met. I've got Fibonacci. I don't have rules met. Sergio, is it okay to not be in the market without the advantage of momentum? Is it okay to not be in the market without the advantage of a clear path? Of course it is. You get nervous that you miss the long trade. Sergio, is someone forcing you to enter the market? Does someone have a knife to your throat? Is there a gun at your head? If it is, blink twice. I'll send help. Is there anything wrong with letting the NASDAQ push up, get the potential to break, and then pull back to an area inside of triggers? This was 1840 to 1854. This was a 14-minute push up where you weren't active and you got nervous. You've got to work through that, guys. You've got to believe that there's the ability for you to take the absolute best trades, have the advantages, and find a way. Momentum, it's only potential to break. If you just jump in and you don't clear trouble, that's what happens. But it turns right into the trend trade. And Sergio, I think this was maybe even your trade. And it goes all the way up to Fibonacci resistance. And is there any reason you can't wait for that entry? That perfect entry, that beautiful entry, that entry that has the least amount of risk, that entry that gives you the furthest room to trouble. Why don't we wait for those entries, guys? Well, because what if, Mark? What if the market never produces another trade? What if the market flatlines? What if the market never gives me an opportunity to enter after this one moment at 7:27 a.m.? Does that make sense, everybody? The hardest thing you'll ever do is nothing and believe that the next trade may be coming. Sergio, we've been chasing this one down for the last 30 minutes. Oh, come on. There we go. If I enter below the area inside of triggers, my stop goes 1, 2, 3, 4, 5 ticks above. If they come get me, it's part of my 20 to 30%. If they don't, they're going to hit my first target. If they hit my first target, it's $100 away from my entry. Guys, this is your pattern. Doesn't guarantee a winner. Doesn't guarantee that you're going to the bank with it. But what it is a pattern that you can prove wins more than it loses. It's a pattern that says this is the most likely outcome, not the guaranteed outcome. If I take this exact trade 10 times, I'm likely to win 7 or 8 of them. I'm likely to lose 2 or 3 of them. And I never know which it's going to be. So what do? I wait for the best. I put my stop where the market shouldn't go. They run me right over. That's not my trade. Guys, we lost $250. We waited 30 minutes to lose $250. What does that mean? It just means nothing. It means we wait for the next trade. Does anyone in the room think it's asinine that somebody's willing to take this trade? Let's make it so you can see where it's at. That I'm willing to sit in front of you in a room and say, hey, you know what? This is going to happen. This will happen more often than you want it to. This is going to happen now and then, guys. You will get stopped out of the perfect trade. But if you took this one, we just weren't in front of it, who cares? You've got so much money. We're still up money. Just didn't work out this time. Somebody with a lot of money wanted to push it higher, and the market just opened, right? That's all right. Now I've got triggers up, but I'm directly into a mid-band and my large triggers are a full bar away. There's a really good chance they're going to close the gap to those triggers. That's my retracement zone. And when they get there, they're going to have to make decisions. Do they want the market to continue up, or do they want to go get that fib anyway? Look at that. Call your shots. Learn the patterns. I would say dollars to donuts. That's where they want to be. We'll see if they get there. Market just opened. What's the NASDAQ doing? Triggers are down. I've got no room to trouble. I can stop looking. Are you guys with me so far? 90% of your day is doing nothing. This is going to astound most of you today. When you see me doing nothing, when I tell you, hey, we're going to try to spend the entire classroom looking for that checklist to be met, and we only find 3 or 4 trades. That's trading. Trend trade, triggers down, price in transition, space to area, pull back to the area, close below. Victor, you get paid again. There it is again. Same trend trade, same making money. The trend is down. Isn't it crazy, Phil? Doing nothing is the hardest thing you'll ever do. Trend is down. Room to trouble. Did not break the zone. Wayne, are you in here? Did not break the zone. It's just a down bar. I don't know what happened up here. And you jump in below trouble and it goes to trouble. Pretty cool. That was your momentum trade to finish the move to the bottom. That's it, guys. That's not a trend trade. That's just jumping the fudge in, hoping it goes, because everything on every chart is screaming. And there's room. Nicely done, Wayne. Counter trend trade. Triggers down. Price on the strong side. Space to the next area. Why would you even say that? That's the perfect trend trade short, Victor. And you said with odds favorable, momentum down, I'm going to hope that market goes up. Congratulations, it did. I would say 60 to 70% of the time with this look on both charts, you're going to get the ever-loving snot kicked out of you. But the market will let you guys get lucky every now and then. The market will tell you, hey, don't trade a plan, just hope. It's a termination condition, Victor. That's cool. But if you're trying to follow a plan, dude, small below large is 100% the wrong look. There are no plans that say when everything is screaming down, go long because of a stupid green line, right? Victor, there's a way to take this trade with a higher probability, but it requires a little patience. Smalls above the large. That's when the opportunity presents itself. As you guys learn counter trend trades, that's fine, learn them. But have a plan, right? So I'm going to show you something cool, Victor. What are you describing right here? Triggers down, price on strong side, space to next area. What kind of trade did you just describe there? Trend trade, right? What does that have to do with going counter trend? What do the rules for a trend trade have to do with going counter trend? Nothing. Not a thing. Why would you bother? You don't need that. What you need here are counter trend rules written out to make sure that they're being followed. Does that make sense, Victor? Which means that your annotations, if you're following the plan, say 15-minute area reached, smalls above large on 1 minute, buy a pullback to the HVA line. Now I know you're using the bar pattern, the white bar with the open above. Those triggers are still a big part of it. That buyer pullback to the HVA line, your bar pattern is anticipating the HVA trade when the rules are met. So guys, you got to know what you're doing. If you're looking for a trend trade, then going counter trend, you're telling your brain, you're giving it mixed signals. How are you going to manage it, right? Because you say strong side, which means that the odds are favorable for it to go down. No, this isn't an HVA trade. An HVA trade means that you're in at that line. HVA trades are counter trend, Victor. And counter trend is probably the lowest probability trade you can take, which is why there's very specific rules to do it, and why the profits are taken quickly, and why they're only taken once. And if they don't work, it's okay to not take the next one. All right, they did close the gap to the triggers, and they had momentum, and they hit resistance, and all the triggers are below, and I am forced to sit still for a moment because I don't have rules met. Victor, I love the counter trends, man. I don't have a problem with them. But there's still not one on the table until those smalls get above. And then it's a pullback to that HVA, but look at where it's at. The HVA is below the area we're hoping holds, so there's no HVA trade. Do I have any new bodies in the room? Because right now I see down. Does everybody see the down triggers? And if I took a trade right here, I got room to get back to trouble. Take them. Simulator. If the rules are met, take the trade. If the rules aren't met, sit on your hands. Could it be that easy? But the problem is you got to learn the rules. So I'm going to ask, guys, you ready? Full honesty here. Is there anyone in the room that needs a little help with momentum? This is your opportunity. Is there anyone in the room that just needs a description, a picture, something to help them understand and make sure that they do in fact understand momentum, separation between the triggers going with the direction of the trend? Everybody's got it, right? Cool. So if you mess it up, it's on you now, not on me. Is there anyone in the room that I can be helpful with making sure that you understand the rules to define a termination condition? If price reaches an area, where are my triggers? If they remain below the area, above the area, it's a termination condition. Rule number 2 is not met. Absolutely no trades into the area. Is everybody comfortable with that? Because once you know those two, once you can look at a market and say the odds are favorable for it to go down, and say, I've got a clear path to the next area, you've got the keys to the kingdom. All you have to do then is go define your entry. And that's the high probability trend trade. Mark, can you pull the picture that shows momentum, clear path entry? Yeah, absolutely. That's not it. Don't look at that. That's not it. There it is. So guys, this is going back to the idea that trades are advantages, not your desire for money. When you can say, I have momentum. This is Ninja Trader. When you can say, I have momentum, when I have clear path, when I can define my entry, I have a high probability trend trade. I have a trade that I can prove wins typically 70 to 80% of the time. So the definition, and Phil, I'll go through this for everybody. Thank you for asking the question. The definition of a high probability trend trade is a trade where each indicator on every chart, there's only 2, on every chart agrees with the rules for the trade. Boom, boom, boom. No problems exist. Once you understand these concepts, it opens the door for the next trade, a medium probability trade. And a medium probability trade means that most of your indicators align. However, an issue exists. Your issue will be that one of your advantages are gone. This is no longer the potential to win 70 to 80% of the time. You're outside of that scope now. A medium probability trade must be managed assertively. You will probably take faster profits, get to a 0 loss level as soon as possible, and medium probability trades are just that. They're one step below high probability. Now, if you look at your chart and you say, man, I don't have 2 out of 3 of my advantages, you are now in a low probability state. You're in a state where there's enough conflict that you have to believe if you win this trade, you might have gotten a little lucky. Does that make sense? You're in control of the entry. Sergio, this goes back to the idea that you don't have to enter if the rules aren't met. Knowing what's working for you, knowing what's working against you, guys, it lets you make the decision on whether you're willing to enter that trade. It lets you make the decision on how assertively it may need to be managed. Let's see if we can do this real quick. So for trading view, hold on. Dunk. Because momentum's not even a rule. When you can define direction, it's crazy that that's an advantage, but it really is. If you can define direction, if there's nothing in your way, and you can define your entry, you have a high probability trade, right? So if you're not trading with direction, but you got a path and an entry, no, that doesn't work because that's ridiculous. To ever give up direction is just asinine. How about this? if you've got direction and an entry area, you can say you have a medium probability, right? Maybe you're taking a chance on the path. And if all you have is an entry area, Victor, low probability. So we'll just say this is the same concept. On TradingView. Phil, does that sound about right? Give me a second set of eyes, guys. I just made this up. Just pulled this right out. If you can define direction, path, and entry, it's good. That's your trade. If you can define direction and entry without the clear path, probably medium probability, managed assertively. And if all you have is an entry, guys, if there's stuff in the way and you're fighting, what are the chances, right? Giving away 66% of it. Here, I'll put this one in there. This is what I like about the room, is we end up creating new lessons based on the stuff that you guys didn't even know you needed. We'll call it Know What's Working. I got you, Wayne. Your chart was just to jump the fudge in, right? I know that you won't be here. Wayne, you had strength and path and just jumped the fudge in. And it was beautiful. Strength and path. You had direction and nothing in the way, right? And you couldn't define an entry. You just jumped in. Below trouble. I love it. And you made money. That was an easy winner. Because with this level of strength and nothing in the way, what's the market most likely to do? Go down. Wayne knows that. Wayne's done a lot of study. Great job. All right. I've got momentum. You used a pullback to triggers and got in on the way down. Right on. I like it. Pulled back to the 1-to-1, sold on the way down. So it broke. So that pulled back, snapped back, and went down. I like it. Beautiful momentum trade. That's hard to see on the minute bars sometimes. Beautiful momentum trade. I mean, it's hard to go wrong, isn't it, Wayne? Everything says down, strong triggers, break, pull back, giddy up. I mean, boom, zoom, bang. It was. I didn't see your pullback, and I apologize for that. I did miss your pullback. It's hard to tell on the minute bars sometimes after the fact, and I probably didn't read your annotation quite as closely. I saw on the way down, but I didn't see the arrow pointing after the white bar. I thought it was the white bar that you entered on. And that's just a byproduct of those minute bars. Sometimes it's hard to pinpoint the exact spot. All right, let's do our chart read. NinjaTrader users. If the perfect trade is momentum, path, and entry. Let's do this. If the perfect trade, if the perfect scenario is momentum, path, and entry. So work with me if you're new. Do I have momentum? Are my small triggers above and separated from the large triggers? Are they angled in the direction of the trend? What do you guys think? We're going to go still shot here because the market changes. Kerwin, I'm going to disagree. Do you guys see the space between the two right here? Do you see that they're all still green? We're good. This is right what it looks like if momentum is about to die, but it hasn't yet. As long as those triggers are green, as long as there's space between, as long as they're going up, not down, that's momentum. Does that make sense, guys? That was kind of a trick question almost. It's kind of an odd scenario because it has the potential to turn down. But guys, if the market rockets up right here, let's see if it does it. They never did. Boom. That's a good example, isn't it? We thought they don't have to be open. Kerwin, they don't have to be open. They were green, right? There was separation. They were still up. So one of the things that we're going to do is, okay, K means Mark, that doesn't make sense. That's okay, but let's go through it. One of the things that we tend to do is create our version, right? I've never in the history of this room said that the small triggers must be wide. What I've said is that the small triggers, let's go back to the first slide, that in order to have momentum, there's a couple things that have to happen. The first one is that the small triggers are up, green, and above the large triggers. Does that make sense, everybody? That's our only requirement for the small triggers, is that they are up and above. And when they're green, they're up. And when they're red, they're down. Are you with me, Kerwin? I like that it turned out this way because this is one of those things where I would second guess as a brand new user. So small triggers are up. They have to be green to be up. And there's space between the two. Large triggers must be wide. I don't want flat large triggers. Large triggers must be wide and angled in the direction of the trend. So let's go back and revisit the picture. With that little clarity, does it make sense that those are still strong triggers, Kerwin? And everybody else in the room. And I'm going to tell you right now, I'm gonna type out what I would have said in this instance, but they might. And this is a trader's biggest downfall. But they might. Change that to are they? Are they strong? Not they might, right? But they might. But they might is as bad as it should. These are opinions, right? These are emotional responses that are creating a fictitious sense of safety. They fit the rules for strong triggers. I have momentum. Where's it at? There it is right there. All right, great lesson there. I think that's an awesome lesson. And Kerwin, I fell for that a million times. So thank you for that. Sometimes I need you newer guys to remind me what goes through a new user's head. So the next is clear path. So price reached this Fibonacci area, right? That's one of the areas that it reached. It also reached this Fibonacci area. How many triggers are above the highest area, guys? Give me a count. Do we have, let's 1, 2. It's a short count. Gab says 3. I like it. Yeah, because it's peaking, right? So it's 3. So is that a clear path? So if it's 1, it's a term. If it's 2, we'll call it crap potential. Perfect, Gab. If it's 3, it's potential. If it's 4, it's clear. So do we have a clear path? What do you guys think? Give me a Y or an N. We did our count. Our count is 3. So the answer is no. It's almost too easy. Whoops, wrong one. Watch this. I don't have a clear path. What does that mean? That means that 33% of my advantages have left the building. That's it. So I have momentum. I don't have a clear path. Now, the recipe for an entry, guys, the recipe for an entry says that I am going to buy a pullback. That's that little retracement down when everything says up. I'm going to buy a pullback, and I'm going to do it at an area. That's going to be a fib, a mid-band, or a yellow 1-to-1. And it has to be inside of triggers. Does that fit? Does this pullback to the midband inside of triggers fit the description of an area? What do you guys think? I say it does. 100%. I say that is a clearly defined entry point. Pull back two areas inside of triggers. Whoops. Are there any questions about the entry rules? This is the most basic approach. These right here are the reason why you won't take the trade if you're following the KISS plan. Are small triggers inside of large triggers strong or weak? Go back to your very basic lesson. Small triggers inside of large triggers. Are they strong triggers? Are they weak triggers? Help me out here, guys. We're going to do lessons today. We're going to do chart reads. We're going to make you think through things. They're weak. So Kerwin, because they're weak, I'm losing momentum. Does that make sense? Because they're weak, I'm giving up some of the advantage that I'm hoping breaks the area. Divergence is a loss of momentum. Does everybody understand that? Divergence prints when there's a loss of momentum in the push up. I'm losing more momentum. So now I've got an entry area. And look how they push lower. That's exactly what they do. They push beyond my perfect entry. They push beyond my advantages and pull me out of that trade. Does that make sense, everybody? If you took this piece of paper, hold on, printed it out, and put it on your desktop and went through that process every time, cover up the ones that are missing, it's going to help you make good decisions. If you look at the checklist for entry, that potential to break, 3 to 4 triggers. We had it, right? We're breaking this down super simple. We had 3 out of the 4 triggers. We had strong triggers on the 13-2. We didn't have strong triggers on the 5-1. We didn't have divergence free on the 5-1, and we weren't from a strong top. You had 1 out of 4 of your advantages in place, and that's the loser you could have avoided. Does that make sense? That's the losers that you could have avoided. Now, does it mean the market won't go up? Of course not. Eventually it does. And as you grow, you'll probably find second entries. But guys, the idea for the KISS plan, the idea for new users is that you keep it so simple. It either is or it is not in the beginning. It either fits the plan or it doesn't. And if it doesn't, it's okay to sit on your hands. Take pictures, write notes, ask questions. But if you keep it that basic, you didn't lose money here. You didn't lose money here. And eventually, there may have been an opportunity. There's Pete's trade. When he finally gets above the area with momentum, that's where Pete makes about 200 bucks, then gets out before the next sign of trouble. Pete, did you catch that one? That fits your plan 100%. He might have been making money in a different market. Pete says, not yet, not yet, not yet. Giddy up. Let's make some money. Yep, coming. I love it. Is it a high probability trend trade? Of course not. It's a way to not give money back when the advantages are gone. Good stuff, guys. Let's see what this one's doing. Until those triggers roll up, those triggers are down. Does that make sense? Until they pinch and change direction, the triggers are down. There's your pullback to an area. Close below. It gave about 7 points, but not quite. If I get a close below here at 08, I've got about 6 points to get down to trouble. You have to make a decision if that's the trade that you want. It's a little tight. Might be okay to do nothing. Look at them. Can't go up, can't go down, can't go up, can't go down, can't go up. Guys, this is what we call a range. This is the idea of a clear path keeping you out of shenanigans. That's a technical term, meaning jackassery, created by the market to take your money. Does that make sense, everybody? It is down. There is room on the large chart, but there's absolutely nowhere to go on the small chart. You could hope, you could wish, you could pray, you could want, right? Poop in one hand, wish in the other. Tell me which one fills up first. Or you could sit on your hands and say to yourself, this market trades 269 million every day. 269 million. Did you guys know that there's 252 trading days in a year? Did you know that if you can find a way to average $400 to $500, you're in a six-figure income based on your trading? 90% of the day is doing nothing, guys. 90% of the day. Phil says, I need to change my thinking. My tendency is to think of areas in a way as my enemies because they keep me out of a trade, but I need to think of them as your friend that tells me where I should avoid entering. That's it. That's it. So, Phil, Novak men are notorious for horrible analogies. If I throw a tennis ball, is it going to bounce from the middle of nowhere, or is it more likely to bounce from an area? Right? All these areas are places that could stop the market, that could halt forward progress. There it is. There it is. There, 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 there. These friends are these areas are your best friends. You know exactly where the market could stop. That is like the greatest friend ever. That's your buddy that takes your belligerent self out of the bar before the big guy whips your ass for being a smartass, right? These areas tell you where trouble is. You know about them before you get to them. You just got to learn to respect them. Areas that can create a bounce. And we're back into the next one. It's okay to let the market break out. Jen, meaning how patient are you? It's a test. That's it. It's a test. Phil, weak side of 15 minutes suggests harder to break through those 1 minute areas. Not an advantage. Sorry. Still traumatized by tennis ball analogies from the adolescent, my butt's up experience. I get it. I get it. I know exactly what you're talking about. But Phil, from the weak side, if none of these zones were there, it's the perfect trade. But because the zones are there, we're in the 90%. That's it. Avoiding a short entry into the area. And how did that work out for you? Avoiding the short into the area without trouble. Worked out pretty nice, didn't it? You want to know what sucks, Phil? Every now and then, from the weak side of triggers, they're going to absolutely decimate an area. They're going to blow through it like it didn't exist, and you are going to second guess everything that's kept you out of trouble. That's one of the hard parts about trading. That one time an area breaks, you're like, oh, I'm trading into it next time. That one time weak triggers push it through an area, that one time getting in on the wrong side of the triggers works. Guys, those are what we call short-term victories creating long-term failures. Boaz, price is down. 2 triggers through. 1 divergence is detrimental. Great entry. Second divergence is the kiss of death. Guys, when it's only the potential to win. So let's go through it. Let's go through what we did on that other one. And now we've got the whole picture, right? The whole scenario. Do me one favor real quick though, guys. Give me a Y or give me an N. I want to make sure you know the answer. Is this the only trade? Is the high probability trend trade the only trade that you can take with this software? No. Phil says no. Chariot says no. Victor says no. The rest of you believe it is. All right. You're setting yourself up for failure, guys. A trade is momentum. Smalls below the large, space between colors match. What do you guys think? Do I have momentum in this trade? Keep it simple. We're talking about this bar right here where he entered. Does it fit the rules for momentum? What do you guys think? All right, let's see what's going on in the live market. Triggers are up. I've got room to trouble. If I get a pullback, oh, you guys are doing it. Okay, cool. Hold on. The answer was yes. There was momentum. What does that mean? I've got 33% of my advantages. Did I have a clear path? How many triggers are below that area right there? That's the last area price reached. How many triggers are below? Is it a clear path? Is it a potential? Is it 2 triggers, 3 triggers? How do I feel about it? It's only 2. I believe we lovingly referred to that as crap potential, right? Low potential. 33% of my advantages are gone. Did I have areas inside of triggers for entry, guys? Here's my triggers. From the bottom to the top, was there an area for entry? Could we define it? Guys, if you don't know the rules for entry, let's talk about it. Yeah, Sergio, we can. 2 out of 3, right? 2 out of 3. What is divergence, guys? Loss of momentum. Say it out loud in your office. Divergence is a loss of momentum. I'm starting to give up that advantage. Boaz says it's only one loss of momentum. These are strong. It has the potential. It's coming from a strong top. I'm going to give it a shot. What's the second divergence? Higher divergence. Guys, kiss of death. Are you willing to risk your money on entry? No. So Boaz, your management opportunity was right here. When the second divergence printed, especially because it's a higher divergence, that was your exit condition if you chose to stay in on the first one, and you did because you entered. That was the market saying, Boaz, you're more likely to lose this than win it. Sit tight, get out, wait for the next opportunity. We're coming for you, but this isn't it. And that produces a small winner. And guys, once you go through this concept, every time you look at a market, it's a non-negotiable. My triggers are up. I'm only looking for longs. There's my pullback to an area, but my rules say get in on the correct side of the triggers. My entry needs to be above those 1-to-1s. So what am I hoping for right now? Right now, my wish, want, and prayer is that price slides sideways for a minute so that the small triggers continue down, so I have room to trouble if I get a close on the correct side. Does that make sense? I know exactly where my trade comes from. I know exactly what I need to see. Well, we just got a new zone, and that changes the dynamic of it. Stupid areas. Here's a good lesson. Here's a good lesson. Why do we say area inside of triggers? There's my triggers. There's the areas below. Once you get below the triggers, guys, you don't know if, when, or where that market's going to stop. Once you get below the triggers, I don't know if it's going to be a mid-band, a fib, a 1-to-1, a fib. I don't know if they're going to this mid-band, to this fib. Heck, I don't know if they're going all the way down to the bottom of the chart. Once you get below those triggers, your advantage of entry is gone. Now, some of you will say, but Mark, there's an area inside of triggers right there. So here's another one of those things that new users do. And when I say new users do it, I mean I did it as a new user. The reversal bar begins the pullback. I'm going to give you guys a little heads up, a little knowledge that'll fix some things. If your reversal bar finishes above, or in this case, below an area, guess what? That area is not producing a bounce. Does that make sense? If it finishes below the area, that area did not produce a bounce. It's out of the equation. I have to look lower. I see people that will say, okay, I'm going to get in right here. You never get a pullback. That's why the reversal bar is so important in the equation. Reversal bar begins the pullback. Guys, if your reversal bar dissects an area, that area has not produced a bounce. If it did, it would have gone from right there. Does that make sense? That's a good one on entry rules. Now we're into Fibonacci support. I do have momentum. I don't have a clear path. I don't have KISS plan rules met. I can't take the trade. If I get a close above 34, I've got about 8 points to get to trouble. 2, 1, there's my entry. Oh my gosh, that was not much room, especially for that amount of risk. I may have messed this one up, guys. Close above, pull back to the area. A little bit of room to trouble, right? Stop below the pivot. Oh man, I only made $150 in 4 seconds. Bummer. Guys, that was tight. That was too tight. But it fits the rules, doesn't it? Triggers up, room to trouble, close above the small triggers. I had room to that problem. I got paid at that problem. Guys, that was 4 points. That was $160. Did it fit the rules? TradingView users, help me out. Did it fit the rules? Was it tight? Yeah, probably broke my tightness. But yes. Guys, if you're on Simulator and you didn't take that trade, you need to take a picture and tell me why not. Or you need to ask yourself, why not? What point in that trade did your opinion come in? If it was too tight, that's awesome. That's a good reason. But that's it. That's trading. Either is or it is not. I don't have a clear path. I'm not entering at the area inside of triggers. It's that simple. It was super tight. And that was it. You need to clear all the crap in the way. That's perfect, Victor. So what does Victor need? Victor needs it to get above that VWAP, right? Or Victor, what if it pulls back and gives you an entry like at 34? That would have been pretty nice, right? Gives you a little extra room. I think one of the biggest challenges, and I say that a lot because I see a lot of challenges in trading, is that the focus, and guys, correct me if I'm wrong, please. The goal of trading is to get paid. That's it. The goal of trading is to win more than you lose. The goal of trading is to build an account, not drain an account. What makes trading successful? Consistency. having a plan that you've proven wins more than it loses. Has anyone ever have not given a penny back? Don't plan to keep it that way with rules-based trades? See, and now that's the wrong idea, Victor. And man, I'm sorry. I know what you're saying. This is the rules, right? If I take 100 of these trades, how many am I likely to win? If I take 100 of these trades, perfect high probability trend trades, how many am I likely to win? 70 to 80. How many am I likely to lose? Come on, math people, don't let me down. 20 to 30. So if I say I won't give a penny back, I've created false expectations. How could you ever say I won't give a penny back if you know that you're going to lose 20 to 30? This is the mental part of trading. So what you say is, I will follow my plan because it provides an edge, and I accept what the market gives me because the market is going to give me both wins and losses. Does that make sense, everybody? This is self-imposed pain. I just took a loser. Something's wrong. I just took a loser. What the market hates me. I took a loser. I have to get it back. Guys, you will take losers. The greatest traders ever take losers. We took a loser today on the perfect trade, right? We took a trade with momentum, with path, with the perfect entry, and we got slaughtered. Instant. Boom, 250 gone. That's a part of trading. So it's not a matter of whether or not I'm going to lose. It's I don't know when I'm going to win or lose. Strong side, no room, didn't take it. Right, Jen? Jen says, my money is worth more room than that. Perfect, Jen. I was talking to a friend of mine, and guys, losses are a very real part, and they're a big mental hitch for a lot of us. Because if you're in Little League and you lose, it means that you didn't win. If you don't get the promotion and lost it to someone else, like there's that negative connotation that goes with it. What if you changed it? What if you changed the idea of a loser and called it a great trade that didn't work this time? What if you stopped looking at the wins and losses and you focused on the execution of the method? Would that take some of the stress out? I think it does. If I look at a trade that loses, guys, if I follow my rules, it's just a great trade that didn't work. Not this time. It's a cost of doing business as long as the rules are met. So Jen, what do you say if you break the rules? I'm just going to do this. Let's say I go long right here. Is this a great trade that didn't work? Trading into a VWAP, trading into a zone, having no room to trouble. So you have to know the difference, right? Is this a great trade that didn't work? Or did I break the rules that have been proven to win more than they lose? It's not a great trade that didn't work. I broke rules. So what do I have to do? I have to go through the process that says, well, what rule did I break? I didn't have room. How am I going to do it better next time? I'm going to make sure that I have room. And this is a self-analysis that we have to do every day, guys. You've got to go through and you got to say, man, I traded into an area. That's probably where my analysis went wrong. I didn't exit with 2 divergences. That's probably where my analysis went wrong. I took the trade with multiple divergences from the area. That's probably where my analysis went wrong. And guys, if you do that every day, if every day you go back and you look at what you did and you annotate your charts and you're truthful, did I have these advantages? Were they there? Were they gone? You're going to find your thing. I talk about the thing a lot. Your thing is the thing that's keeping you from riches, right? For some of us, it was trading in determination conditions, no room. For some of us, it was late entries because we second guessed the right entries, and by the time we got in, the trade was done. Some of us get in too soon and get run over. Some of us fight trends. Some of us just jump in hoping things break, right? And guys, the reality is that you're going to make a million mistakes. But if you go through the educational process of taking pictures, talking about what you saw, talking about what you did, relating back to advantages, and then most importantly, putting them in the room for feedback, guys, you're eventually going to weed out the mistakes that you're making. The patterns are easy. I can't stress this enough. The patterns will take you 2 weeks to learn because you have to be able to identify momentum, the potential to break, and a pullback to an area. That's it. There's 3 things on the checklist. You've got to recognize momentum, the potential to break, and a pullback to an area. You've got to be able to recognize momentum, the potential to break, and a pullback to area. Momentum and a clear path, and a pullback to the area. And once you learn that pattern, guys, you've got it. Keys to the kingdom. Golden goose. Now you've got to learn how to repeat it. And here's kind of a cool thing. You guys remember that short that we took earlier today? With the momentum and room to the fibs and the pullback to the midband inside of triggers that didn't work? There's the exact same pattern, 100%. The first trend trade before it, the second trend trade that we took in the classroom together, this one won. Because I never know if it's going to win or lose. All I know is that when I have momentum and path and a pullback to an area, I have a pattern that I can prove wins more than it loses, guys. The dice are loaded. Can you wait for the perfect entry? Can you accept when the perfect entry doesn't work? That's the hard part. Jen says it's like you said when it breaks areas. The brain says breaking zones will work next time, but no. Amen. The ES for 15-minute has been dancing. Wait. So you're looking at the S&P. Triggers up. You've got about 3 points. Look at, oh my gosh. Look at how often the areas are holding. That's the dancing Jen's talking about. So could you hypothetically, shenanigans, I love it. Could you say this area is, keep it PG-13, is a pooper of a spot. My next trade won't be anywhere near it. There you go. I'm trying not to swear. I got a little colorful yesterday, a little more than I needed to. Guys, can you just say, I'm going to go make a sandwich. I'm going to go walk the dog. Go get some coffee, right? Text your wife. Tell her she's pretty. You'll get more out of that than you will trading in a zone. So be patient, right? If it's really going to go up or down, it'll go up or down. If it goes down here, I'm fighting direction, right? If it goes up here, I'm trading into areas. That was your view this morning. That's it. Sideways. Just sideways. But then it did pull back to the midband and it did close below, and it did it with the large chart rules met, and it was a short trade. Claire, I wasn't sure if anyone caught that. When in doubt, text your wife that she's pretty. It yields way more than trading into areas. All right, guys, I'm going to take a minute. NASDAQ is up. Uh-oh. There's my pullback to the areas. 654. Are we going to get a long trade? 3, 2, 1. Oh my gosh, there it is. Stop loss below the pivot. We'll see if they make it to the VWAP, right? They either will or won't. They either will or won't. That's not for me to decide. My job is to take every trade without hesitation, to take every trade where the rules are met, to take every trade when my indicators say we're more likely to go to that area, to that VWAP, than we are to go down. Does that make sense, everybody? There it is again. It's tiny profits, but we're making money. We did it twice in there. You know what opinions are like, guys. If your rules are met, this is what simulator's for. Take every one of them. Take every one of them. And then start to refine the process. I'm going to walk away for a minute. You guys, go stretch your legs, get a drink of water, do anything that you want to do. I'll be back in a few. If you post, we'll look at it. If you have a question, post it. If you need help, let me know. If you're curious about the funding company, let me know. If you're curious about the automated trading system for NinjaTrader, let me know. If you need to know, I don't know, why birds suddenly appear, I can't help you with that. I'll be back in 5, guys. Let's just keep going. Let's keep it moving. Guys, it's still up, isn't it? It's still up. Small triggers rolled. The only way I can take an entry is with a close on the correct side. And there's nowhere to go. Jen, it's your shenanigans zone on the NASDAQ. Termination held. Trading into a termination might have worked, right? So now we're waiting. So let's talk about the if-thens, guys. If 3 of my trigger lines make it through 68.57.41, then I will have the opportunity to look for a short trade. Does that make sense, everybody? I know exactly what I'm looking for regarding my checklist. If 3 triggers get below this fib, I will take a medium probability trade if it's presented per the rules to go short. Everybody good with that? Now it's not even close. Here's my other one. If this area holds, if my large triggers roll, if my small get above, if I get odds favorable momentum, if I get at least 3 triggers through this area, then I'll look for a long trade. So guys, because I know my plan, I know exactly what needs to happen and exactly where my trades are coming from. What does that mean? That means that as long, let's make this a little smaller. As long as I'm not in my trade area with rules met, stop looking for a trade. It's not there. If you're following the KISS plan, it's not there. It can't be there. It's impossible for it to be there. And that should take a lot of the stress off, right? Because now you're not wondering if you're missing something. Now you're not nervous that you're not in the right entry. Now you're just saying, hey, my rules aren't met. I'm going to kick back. I'm going to relax. I'm going to wait. This is no stress. Trading doesn't have to be stressful. It just has to be consistent. That's it. Going up with the triggers, isn't it? Break even twice. So let's see what you did, Phil. Direction is up. You're above trouble. At 34, you're above trouble. At 40, you're above trouble. There's your pullback. There's your entry. There's your target. Large short target, right, Phil? Isn't that the expectation of a trend trade, to get to large short trouble? So let's talk about trade expectations. If I'm in a trend trade, this side of my workspaces are potential speed bumps. Does that make sense? If I'm in a trade, these are the areas that could disrupt it before it gets to its target. This chart is targets. And your targets are anything that could stop the market. Now they can break every now and then. Large chart is used for targets, for terminations. Small chart's an entry chart, but the small chart has bumps in the road. Does that make sense, Phil? Break even is better than nothing. But guys, it's large chart expectations. That's why on the large chart, we don't even look for a small chart entry if there's not room to trouble. And we don't use phrases, well, I don't, you might. We don't use phrases like VWAP should break, it has to break, it will break. Just change it. VWAP can suck money out of my account. Perfect target. And what happens is you don't say, I hope, right? I wish, I want, I'm praying. You just say, that's it. If I can't get to it, I don't want it. And look at the VWAP holding. You guys remember playing Floor is Lava as kids? VWAP is lava, guys. VWAP will stop a market so fast, make it bounce so fast. But now we're above it, right? It's kind of tight, guys. When the market consolidates, you're going to get more zones. When the market consolidates, you have to be more patient. It's just a part of it. Just a part of it. Here we go. Are you trading the maximum allowed? Doesn't look like it. So when you're doing partials, and I don't have any problems with it, the location of where you're doing it. So if you are like trying to activate a buy limit below price, it's not going to let you do it. If you're trying to activate a sell limit, if you're trying to be where the market has already been and it's on the wrong side, sometimes that'll do it. It's hard to know exactly what's going on without seeing it. I've never had a problem with AMP as long as I'm doing it in the right spot. If my profit target is up here, you guys, do you want to do one just together, Phil, and you can tell me if I'm doing it different than you? Let me get off of my AMP live. And let's go paper trading, because paper trading is where we learn lessons, right? So I'm just going to do this. I'm going to put 4 contracts in, 5 contracts in, and I'm just going to buy. And guys, this is not a trade. And I'm going to put my stop loss so far down that it shouldn't get hit during the lesson. And I'm going to put my profit target so far up that it shouldn't get hit during the lesson. So I'm long 10. Now, if I want to do partials, I have to make sure that my quantity is less than whatever it is here. That's the first thing. And I'm going to right click and I'm going to sell 5 limit. That's what you're doing wrong, is the quantity. There you go. So if I'm in 10, whatever I'm doing has to be less, right? And then if the market gets to it, I'm just going to take it off. Boom. It'll adjust it down to 5 contracts, down to 5 contracts. And I could do that all the way up. I could do singles, and I could go sell 1, and I could go sell 1, and I could go sell 1, and you could literally run it all the way up. All the way up. Good stuff. And then if you are out of the position, make sure you eliminate all of your hanging orders. Your quantity was off. Thought you adjusted after his place. No bueno. That's a $100 lesson. I like it. All right, Sergio, you said it didn't work. Let's go through it. All right. Did you have momentum, Sergio? You didn't write anything on the chart. Did you have momentum? Yes. Did you have a clear path? Guys, if you don't annotate your charts, be prepared to answer the questions. Did you have a clear path? 50-50. Sergio, what's the biggest killer of 50-50 trades? Okay. What's the biggest killer of 50-50 trades? Have you figured that one out yet? Divergence. Divergence kills more 50-50 trades than it doesn't. Than it does not. Other than that, it's perfect. So Sergio, it missed your entry at the mid band, right? And when it started to go without you, you jumped in. Does that sound like a truth? I recognize that entry. Or were you trying to catch it on the way down? You didn't. You wanted the mid-band. You got in below the 1-to-1s when the market started its way down. If you had a limit order at the mid-band, you would have been up here. Does that make sense? But it didn't reach the mid-band, which means it probably didn't reach your order, which means that when it started down here, that's probably where you got in saying, oh my gosh, it's going without me. And you may not have, but that's what it appears to look like. This one right here. It's not quite to my entry, but it's going without me. I'm going to jump in. It's okay. I've done it. That's why I have this picture, because I've done it 1,000 times. But that's okay. It's a good look. Divergence is one of the problems with it, but it's still a good looking trade. And sometimes they don't work. Yeah, show me what happened after. I love to see what happens after. I think that's always, for me, it's very interesting because it gives me the opportunity to do the full analysis. All right, so there's your mid-band. There's your reversal bar. Didn't go. Stops in the right spot. I like it. The only thing that I can really see that was problematic, Sergio, was divergences is a problem, without a doubt. But if you choose to take it, you're in at 42.25 instead of 47. That's about $100 difference right there. Stop once you get that confirmation down, especially on a medium probability trade. I'm a tick or two above that one. So there's another $100. About $200 you didn't have to lose on it. Does that make sense? Insisting on the right entry at the area inside and using those reversal bars for stops, especially on medium probability trades. Does that make sense, Sergio? Your large chart read is good, man. Your large chart said look for that entry. That's the nervous entry. And then that's not using your stop placement to protect you a little bit. No, wait. I'll wait. Those two down bars do give you... I know you were going short. There's your momentum, right? There's your potential to break. Sergio, there's your triggers. Where is your area inside of triggers? Is it this mid-band or is it below that 1-to-1? Where's the area? Help me out here. It's the mid-band. So Sergio, is it possible when the market did not make it to the mid-band inside of triggers and it started down, my brain said, oh shit, it's going without me. I better jump in. What do you think? Has anyone ever done that? I've done it because it didn't reach your entry point. You said you went short at the mid-band, but you didn't. It didn't get there yet. None of us, right? All of us have done it. All of us have done it. Your initial stop, per the plan, is just above those triggers, right? And you had it. Good stop placement. But once it gave that reversal bar, you could have reduced risk just a little bit more. Does that make sense, Sergio? Now, I don't know if that's really what happened on your entry. I'm not going to pretend to know what was going through your head, but I would say 98 out of 100 times, that entry right there, that's exactly what your brain said. And how do I know that? Because my brain has said it 1,000 times. And I've taken that entry 1,000 times. Great entries reduce risk from the correct spot. Sergio, it's the perfect large chart look. It's the wrong entry, and it's the I hope stop. Once you get that reversal bar, man, it's okay. Reduce that risk a little bit. It's only medium probability. And I think that's what I really want to put in on this one. If it's only medium, I want perfection in momentum, and I want perfection in entry, and I want the least risk possible. Does that make sense? I want to give myself every chance that I possibly have. Sergio, divergence on a 50-50 is one of the biggest problems with those 50-50s. One of the things I see people doing, Sergio, this is the best momentum. Everything is awesome. Life is good. I like the idea of a short. You know what? I will force the NASDAQ to give me a down bar. Why? Because then my stop goes right above that reversal bar. No worries, Phil. Have fun. Does that make sense, Sergio? It's not perfect. I'll force them to give me a reversal bar in the direction of my trade. I think there's a time for confirmation bars. This would be it. Divergence on a 50-50. I'm still willing to take it, but it's got to be my entry. Yeah, I love the trade, dude. I really do. And there's a lot of good lessons in there, and I hope they made sense. I do hope they made sense. That's one of the things when you trade the NASDAQ, you definitely run the risk of that overrun. All right, Pete, 3 times. Let's see what we did. Weak bottom, hits the mid-band, closes the gap to the triggers. When it closes the gap to the triggers, Pete, they make decisions, right? They're either going to go up or down when they close that gap. Odds favorable momentum on the small chart. They don't break below those triggers. And Pete says, well, they're probably going to go test things. So he makes some money. And then he has momentum and path, and he just takes a pullback to the area inside of triggers and makes money. Pete, this is outstanding trading, my friend. Outstanding trading. Nicely done. I don't know how to react when you start getting conservative. Well, here we go. Directly into a fib. 58, directly into a fib. But you did still have momentum on the large chart when you took this one. It's that little bink right there. 3 triggers through in momentum. Pull back to the area. 2 out of 3, right? 2 out of 3. Take it and manage. You do a great job. Sorry, you don't get the not conservative on this one because the trade is coming from here, not there. 3 triggers through, separation, everything's green. Not a clear path, but it's a very definable entry. 2 out of 3. Take it. Get your stop in the right spot. Be willing to manage because it's not perfect. Really well done, Pete. Next one, super conservative. Is it? Everything down. Clear path. All right. You ready? Pete, this is just me being a curmudgeon. You say the next one's super conservative. Wouldn't super conservative be itty bitty risk instead of jumping in that late? That great entry right there gives you room to the first sign of trouble. This one doesn't, right? Gives you way more profits when you do get to trouble. You were watching the S&P. And guys, this is awesome. So, and Pete, that's just me being silly because it's beautiful. You're in on the right side of the triggers. This is Pete saying, I wasn't there for the entry. But it's also Pete saying, with this look, the expectation is the fib below. And this is also Pete saying, still a lot of money on the table to fulfill that expectation. That was the perfect entry. If you're not there, that's not your entry. But if the market's right here, you already know where it's most likely to go. Pete, I like it. You're not trading in anything. You have momentum. I mean, but this is how you take those basic concepts of the perfect entry and the expectation, and you find ways to make just a little more than if you were only trading high probability trend trades. Man, that was momentum and path. Oh, they might have gotten us there, huh? Not quite. No separation. Giddy up. Not quite separation, so my plan says I'm not allowed to take it. Yeah, I know you would normally get it. Two divergences doesn't kill it, but if I'm losing momentum, if I have weak triggers, this is one of those looks where they're more likely to start pushing up higher. I don't have the momentum. The odds aren't favorable for the market to continue down. I'm losing momentum. What does that mean? Well, that means that this could happen. And it did. Because all I had to do was talk about my loss of momentum. And it works out. Triggers are up. I'd have room to trouble. I would need a close on the correct side of the small triggers. With room, didn't happen, not there. Did anybody, that might have been right into the VWAP, huh? No, that was above the VWAP. That was above trouble. Anybody catch that one on the way up? Maybe, maybe not. We'll see. Miss Jen, what'd you do? Weak side, pull back, close above, straight into a mid band, and it bounces down. Rules for the win, right, Jen? Or how about rules for the not losing? Rules for the not losing. I love this stuff. I know that you guys are like, Mark's only taken 2 trades. This is basura. Strong triggers. 3 triggers through. This is the NASDAQ. NASDAQ's got all sorts of craziness. Pink 1-to-1s are a termination. I don't have a trade. Here's the ES. We said it either had to go up or down, right? It hasn't yet. We're still caught in the range. Let's see what happens. All right, 10:51. I'm going to go back to this picture real quick. You guys know I have a million pictures, right? I want to go back to this picture, though. And I want to encourage you guys. I can't make you. But I want to encourage you. Every morning. Well, let me start by saying every trade that you take, every time you enter the market, take a picture and go through this process. Take a picture of your entry, take a picture of your advantages, and go through the process of talking yourself through this. I had momentum. I had the potential to break. I took the pullback to the area. This is where I got paid. Do this on every trade. It's easy on the ones that win. It's so easy on the ones that win. It's hard on the ones that don't win. But that's where the lessons come from. And then every morning, I want you to go through this process. And this, does anyone do this? Does anyone other than me look at their trades from yesterday and say, all right, I'm going to get focused on the day? Every morning, study the previous day's trades. What worked? Does anyone have one word? What works for you guys? Of the three advantages, which one tends to give you the best results? There's mine. I typed it in the room for you. I typically win more than I lose if I insist on a clear path. I typically lose more than I win if I don't have a clear path. So that's what works for me. And it just happens to be the polar opposite of what doesn't work. So if I look at my trades from yesterday and I ask myself, what do I need to focus on today? Well, to increase my likelihood of success, today I will focus primarily on making sure I have a clear path. That's what I'm going to do today. Today I'm going to make sure that every time I enter a trade, I've got some room to make money. I don't have something that could create a bounce. Why? Because I realized that's what doesn't work for me. That's what doesn't serve me. That's what's draining my account. So before I ever start the day, I've got a plan, right? And guys, when you create that plan, you start taking pictures like this. You start saying things like, you know what? That one's not mine. And I'm excited about it, and I want it to be long, and I think the market's going to go up, but that stupid line right there costs me more money than I'm willing to give up. This is such a game saver, a bacon saver, if you will. You have a trade tracking sheet for all those pictures to be nice and neat. You can put a date in there if you wanted to. You could make them different colors, whatever. If you're not sure what your problem is, go to the feedback from class. I'll help. Well, you tend to jump in before an area breaks. You're going to see it 5 or 6 times in the feedback. That's your thing to work on that day. You're going counter trend when the small chart still has odds favorable momentum and you're losing. That's your thing to work on today. You're not waiting for the area and you're getting caught up on those little ticks on your entry chart that are forcing you to enter the market. They're not really. You're making that choice. 5 points away from the right entry, $100 extra risk and $100 less profit. So guys, go through this process. It'll absolutely change your trading. We've been doing the same thing for almost 30 years. We've watched the same mistakes for almost 30 years. We've learned how to fix the mistakes for 30 years. If you don't trust your plan, you'll make those same mistakes over and over. If you're chasing money, you'll make the same mistakes over and over. If you're taking trades that you can't prove win more than they lose, why are you taking the trades? Because you're focused on the money. Guys, the money is a byproduct. It's a result of the process. Tree is not paper. There's a process to create paper from a tree. So, all right. Momentum is up. Path is not clear. Does everybody see it? No triggers through the divergence high. No triggers through Fibonacci resistance. Even if it does turn blue, I've got no triggers through Fibonacci resistance. I don't have any rules met on my large chart, which means if I choose to enter an area inside of triggers, I've made the choice to break the first 2 rules. I've made the choice to ignore everything on my large chart and hope the market goes up. I got momentum pushing it. It's just a big brick wall. Some days you're the boot and some days you're the butt. You know, even my wife, who doesn't trade, said the market may be really volatile tomorrow. Did you like that, Claire? Thank you. I wasn't sure if anyone actually watches those. Trusting your plan. My goodness. Once you trust it, it's so liberating. It's so freeing. I believe without hesitation that if I put these advantages in place, I'm going to win more than I lose. And then just let the chips fall where they may. John Novak and I are working on some stuff. We got some stuff coming, hopefully, where we're going to start doing 1 to 2 week long classes that aren't just entries, guys. This classroom is reading your indicators, right? And then I go on tangents about psychology. We're talking about really putting something together that dives deep, that is complete A to Z, not just reading your indicators. So hopefully all that's coming up, but trust is a big part of it. If you're a Mark Douglas fan, he's so good at those concepts. So good at those concepts. Or he was. I apologize. He's no longer with us. When you stop expecting to win every trade, when you don't care about the result and you care about the execution of the method, it will change your life. It will change your life. If losers are no longer losers, they're just great trades that didn't work, it'll change your life. If being able to sit still because there's a termination in the way instead of hoping it breaks, it'll change your trading life. It really will, guys. All right, it's 11 a.m., which means I'm going to walk away for a minute. You guys know what you need, right? We got all the momentum in the world. Let's get some triggers through. Jen, just know where to go. Sure there is. You could go to the loo, you could go to the kitchen, you could go to the yard, you could go to the grocery store. There's just no trades to be had. You're right. It's just everything's in the way, right? It's getting dark. I'm so glad I'm not over there. 4 p.m. I hear you. My buddy was telling me in Spokane, like in the deepest part of winters, it starts getting dark at like 2:30 p.m. I couldn't do it. I'm so glad to be back in Texas. And I'll be in Georgia in a couple weeks. Eastern time frame. You guys are in trouble. I'm going to be bright-eyed and bushy-tailed for every class. Good luck with me. Georgia is it can be in the summer, absolutely. It's a little bit humid, close to the coast. There's some heat in Georgia. There's actually a phrase from an old movie in the 80s, hotter than Georgia asphalt. So it's a thing. It is a thing. All right, guys, when I get back, I guess it's just me. 72. You're Miami, right, Sergio? You know, John Novak sends me the weather from Sarasota, Florida. Every time he sees that I have rain or cold, he sends me the weather from Sarasota. It's not cool. It's not a nice thing to do. Not hot, it's perfect. San Diego's like that. The weather where we're going is very Florida-like. The winters are mild. You may get a couple little cold days, but I can golf year round, so I like it. My wife almost got a contract just north of you guys, Sergio, in Hollywood. 3 to 6 months. It depends. Her contracts are 3 months, but she's never had a contract where they didn't ask her to extend and take a full-time job. So she's creating for this hospital a perioperative plan. So she'll be in charge of creating the education to train their new people and their experienced people to work in the operating rooms. And it's about a 6-month endeavor, she said. So I imagine we'll be there for 6 months. And then who knows where? It's one of the great things about trading, guys. You can do it anywhere in the world. All the momentum still. Price reached resistance. I am living the dream, Jen. There's no doubt about it. I believe the phrase is too blessed to be stressed. So good stuff. All right, guys, I'll be back in 5. We got to clear some trouble to call it a trade. Go stretch your legs. All right, I'm not good at breaks today. I don't want to miss out on anything. Triggers are up. There is nothing but room to trouble. Just one more roadblock. One more thing in the way, right? Dag nabbit. Does everybody know what Chick-fil-A is? You guys ever heard of Chick-fil-A? Chicken nuggets, chicken sandwiches? Pretty popular. Used to see them in the mall all the time. Did you know that they're not open on Sunday? Chick-fil-A is not open on Sunday. Some say that it's the Lord's chicken. Did you know that if you want them to be open on Sunday, they're still not? That if you go to the drive-thru on Sunday, you can't get it? That if you really wish you had a Chick-fil-A sandwich on Sunday, it's not going to happen? The likelihood of you successfully getting that sandwich goes down dramatically. Some would say 100%. Trading can be like getting a Chick-fil-A sandwich. If you're not in the right spot at the right time, you're not getting it, right? Trading into a termination condition is Chick-fil-A on a Sunday. No momentum into a fib is Chick-fil-A on a Sunday, guys. Your hunger and your desire for Chick-fil-A will not change that fact. Off-brand Chick-fil-A sandwich. You got to go to Popeyes and get their sandwich on a Sunday. Pretty good. I don't know. This is how my brain works. Morgan, great minds think alike. But the weight is the real thing. That's the hardest. Is it worth it though? Have you guys ever, like Victor did, show up on a Sunday and you're like, oh, dang nabbit, and you're like the first one in line on Monday because you know it's worth it. You know it's worth waiting for. I personally don't like Chick-fil-A sandwiches, but I do love their nuggets. Do love their nuggets. Hobby Lobby is the same way. Hobby Lobby is closed on Sundays. So if you need a live, love, laugh wood cutout, guys, you're not getting it from Hobby Lobby on a Sunday. Cane's and Chick-fil-A's right beside each other. Yeah. In Texas, Morgan, I don't know how it is in California. In Texas, we used to live next to the busiest Chick-fil-A, I think the busiest in the country, in Cypress, Texas. And at any moment during the day, it was 25 to 30 cars deep. At any moment, open to close, it was 25 to 30 cars deep. Whataburger in Texas, yeah, I've got one about 3 miles from me. I do love some Whataburger. They've moved those. They've got those in California. No, where do they have them? I think they have them in Florida now, maybe. You have 2. Do they still have Crystals there, Victor? Man, if you ask a local, it's garbage. If you ask someone that doesn't get it, Crystals is magical. Whataburger's in Columbus, Ohio? Or Crystals? Whataburger? Right on. That's lubricant after a night of drinking. Guys, this is what you do when there's not a trade, right? You find a distraction. See how I turned that into a lesson? White Castle knockoffs, they are. But do you see how we did that? Instead of trading directly into termination conditions, we did something else. We talked about Chick-fil-A. Instead of trading directly into things that could stop the market, we did something else. Why? Because you have to do something else instead of take the wrong trades if you want long-term success. 92 is my HV, or is my divergence high, right? Is it safe to say that if I take a long trade, I want it to be above that problem area? I feel like that's safe to say. Let's see if it sets up. It might. Is a tick above? So hold on. Hold on. Watch this. You guys ready for some bad news? Maybe it is. Did price break that area down? Yes. So watch this. So that area of support, not because, became resistance, right? When price breaks through, now it's acting as resistance. Right at trouble here. So what's it take to make it act as support again? It takes a break and a pullback. Does that make sense, guys? Because price broke below, support became resistance. In order to classify it as support once again, which is what I want to trade from in a long trade, it needs to break and then pull back. Let's see what happens. Let's just watch it. Let's just talk about it. Whoa, I'm glad I didn't anticipate. All right, full guilt moment. If I had a nickel for every time I had jumped in right there thinking that it was about to go without me, I'd have a sack of nickels. Anyone else? I would have a sack of nickels. Look at that. Well, that was a down bar right off of an HVA, right off of resistance. And it didn't just magically go up. I'll be damned. Still hasn't broken. They're trying, aren't they? They're trying. We'll see what happens. What would you guys like to talk about? We're in discussion mode. I've looked at both of our charts. My rules aren't met. We're probably about break even on the day. It has not been a very trendy day, has it? It happens sometimes. Has not been a very trendy day. That's where I go to Old Faithful. That's where we look at the NASDAQ. That's where we say price reached, trouble. Large triggers were a full bar away, gap theory, and now they're going to try to make decisions. I need to either get below trouble or above trouble until there's something to do. Which way is it going to go? Which way is the large chart leaning? NinjaTrader users, is it leaning up or down? It's leaning down, right? Is there anywhere to go? No. I'm arrogant. I believe the market has to do what I want it to do. This says down, therefore these have to break. They have to. That was divergence. It has to break. It has to. No, it doesn't. Market does not care about my opinion, which is why rules are so important for me. The market does not care about what I want. The market doesn't know I exist. But the market moves in patterns, guys. The market does the same thing over and over. When price reaches a mid-band area and the large triggers are a full bar away, it tends to close the gap. There it is again. When there's momentum and at least the potential to break, it tends to continue. When it reaches an area and the triggers don't break, it doesn't seem to work. Joel, I'm entertaining you today and saving you a lot of money listening to the class instead of trading. How to create on Ninja 13.2 with market flow template. Go to tech, Boaz. I don't know because it's got to draw data from two different areas. Go to Jason in tech. He'll be able to help you with that. Or send John Novak an email. He may have a template ready-made. I don't have it. Jason will get you. Yeah, sorry. I know that wasn't very helpful. All right, Justin. Double top. Triggers down. Thought it had potential to break. You say it was a 50-50. All right. Are you with me, Justin? Cool. 50-50 is not a reference to your chances of winning. It's important that you recognize this. 50-50 is derivative, and it comes from the smalls are through the area, large are not. 50% of your triggers are through. I think this is one of the best lessons you can get because this is a language thing. Let me go to 101. 101, then we go to classroom, then we go to chart reading, then we go to termination. So 50-50, that term comes from 50% of your triggers through, 50% not, right? There's no such thing as, hey, I've got a 50-50 chance of, well, I guess it's every trade is 50-50 really, right? You're either going to win or you're going to lose. So let's go through the read. No separation between the small and large. Price reached Fibonacci support. None of the triggers broke. The only thing you had was an area inside of triggers. And it got you and retested the area. So from the double top with the roll, triggers down, perfect entry, it did retest the area. Now the question, well, and the other comment is you didn't enter here, right? You entered all the way over here directly into a fib. And then the fib held and you stayed in. And then the fib held and you stayed in. And then the fib held and you stayed in. And then it went down. All right. So void of momentum, no clear path, just the entry. And it worked out for you this time. And I'm going to say it, guys. I'll say it every time. I love it when you guys get lucky. I do. I love it when you get lucky. It makes me happy when you guys get lucky. More often than not, you're going to lose your trades trading in determination conditions. That's just a fact. That's why rule number 2 is in place. You ignored multiple divergences. You ignored everything getting to the wrong side. You ignored large triggers going up. You kept all of your risk on there, 300, and eventually it goes down. So this was the ES. Cool. So Justin, I'm going to talk about this. This is one of the things that Pete does well. I hate inflating Pete's ego, but this is good. So right here, as you build experience, you'll say, man, large chart is down, but I've got all this nonsense in the way. I don't know how the market is going to react, so I'll sit tight, right? And the whole time, Justin, you're like, it all says down, but man, there's all of this yuck. And then that happens. And then it starts to break, right? And this is where you see the patient traders find their entry. And let's just go see real quick. Where was it? It was somewhere. Whoops, I went way past it. Oh, ours are going to look different because you're in a different time zone. Maybe that's it. Maybe that's not it. Maybe it was earlier. But it's like everything struggles, 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 struggles. And then if you get that break, then you get a chance. And this really never gave it up. So it's awesome to get a little lucky. I love getting a little lucky. Does that all make sense, Justin? Not knocking the trade. Like the large chart direction was on. The triggers were letting you know it could push down. It's just, it did hold, right? And there was a lot that could have taken a lot of money out of your account. And then the question is, did you catch the move up after? Maybe, maybe not. I don't think there was really an opportunity. That was the only one as a momentum trade. So awesome stuff. Keep posting. Don't stop posting. We'll keep going back to those really core concepts, right? Momentum path and entry, momentum path and entry. And what you'll find is that there's a lot more opportunity than you realize if you break it down. And once you figure out what the absolute best trade looks like, you start to find the next levels. Divergence is the biggest killer of the potential to break. Look at the big push down. Crazy, isn't it? Price reaches a mid-band, large triggers are a full bar away. There's your gap theory. Some people take that trade right there. I like it though because the market seems to do the same stuff all the time. 2 triggers through. There's the first divergence saying probably not going to work. Second lower divergence says, seriously, we told you. Why are you holding on to this trade? It'd be amazing at how many red flags the market will throw at you and keep you out of trouble. Oh, look at that. It never broke. It never broke. This is the one. Is this going to be the one? There's our pullback. We're above everything. Oh, if I get a close above triggers, I've got room to get paid. What do you think, guys? Does it fit the rules? Triggers up. Room to the next area. Pull back to the area. And I've got 30 seconds to know whether or not my entry rules are met. TradingView users, help me. Don't let me make a mistake here. I'm only looking for longs. I'm above my trouble. I've pulled back to an area. I just need a close above the small triggers, and if I get it, my stop has to go below the pivot low. 9 seconds, 7 seconds, 6 seconds, 4, 3, 2, 1. Not my entry. That's it. That's trading. My rules weren't met. I choose not to trade. Did that make sense, everybody? Did you guys in the funding company, TradingView, know that if you never fight these triggers, you're more likely to win? Did you know that if you wait for the close on the correct side of the triggers, you're more likely to win? Did you know that if you have room to trouble, you're more likely to win? Did you know that it's the craziest thing? The market does the same dang thing every day. And if you find a pattern that you can prove wins more than it loses, you could say out loud every trade, this one's more likely to win. My trouble is at 02, which means I really want to be in around 97, not up here at 99. So I choose not to take the trade. There's not enough money for me to make money there. That's my choice. I try to have $100. And because I try to have $100, that's not mine. Now, is the trade already going? It is. Is my stop already defined? It is. Could I just take a lower entry? Even 98 doesn't give me room. There's that 1-to-1. I don't want to take it below the 1-to-1. What's the expectation of the trend trade? The expectation of the trend trade is somewhere in there. Let's see if they make it. Since technically my rules weren't met, I'm not in it. So I'm going to watch it. I'm going to analyze it. I'm going to think about it. I guess room helped. Those 1-to-1s printed, didn't they? That changes the dynamic a little bit on the 1-minute chart. Now I've got an area on the 1-minute chart that could mess up my good time. And it seems that they are so far. Let's just watch it. Are there any questions? Everybody's heard about the fear of missing out, right? The fear that you're not going to be in the move that makes you make unsound investment choices. Early entries, moving stops, right? I think the fear of being left out is a bigger detractor from success. Watching a market do something, and you, in your brain, you say, well, everyone else is getting paid and I'm not. And you start doing silly stuff to be a part of it. Not worth it, right, Claire? There'll be more. But if it was worth it, you're still in. If you chose to take the trade, you're still in. They might have got your target. They might not have. I don't know. We'll see. Psychology and trading. We're trying, Sergio. And I'm not a licensed psychologist or psychoanalyst or therapist or anything like that. But I've worked with traders for the last 6 years. And I have seen everything I think that you could ever see. And I just mention it. And I've probably been through everything that you can be through. So I talk about it. Everybody wants to sell you indicators. And hey, buy my indicators, buy my indicators. Guys, we want to produce traders. We want to help people recognize advantages and find a way to win more than you lose and be successful and change your life. You're learning. We're all learning, Sergio. The patterns are easy, aren't they? Does anyone else feel that other than me? The patterns aren't difficult. Defining a trade doesn't take a long time to learn. Sitting still, sitting on your hands, doing nothing. That's the challenge. The rules are easy. It's the psychology. So when I start teaching a psychology seminar, I expect to see you guys in there. Man, that one little thing. Always something in the way, but there's not, is there, Justin? Is there really always something in the way? Or are you like my wife that says you always leave the cabinet door open? Seems like it, but it's not. It's not true, is it? It's not true at all. There's not always something in the way, or people wouldn't make money. People trading a very solid plan wouldn't make money. Sometimes there's things in the way, and when there's things in the way for 20 or 30 minutes, it's annoying, right? It feels like it's always in the way. It feels like there's never a clear path. But I don't believe that's true. They're just not giving it up the way I need it. They're not giving up the entry the way I need the entry. The way my rules say I need to take the entry. The way my plan says my entry is taken. And guys, that means that I choose to do nothing. That I choose to do nothing. 2 triggers through. That I choose to do nothing. Some of you will take that one. Except there's no areas inside of triggers. That one didn't even give an up bar above. Not having room has done good things for me here. Only having 3 points from the close above kept me from taking a trade that failed. And it could have gone, right? Triggers are up. From where I am now, I got pretty good room to trouble. Pull back to the mid band, down here, right? Get a tight little close. Maybe it would give me room to make $100. This market is Christmas. Not much going on. Not so far. We've made a little bit, right? And we make a little bit today. Does it show? Oh, that's paper trading. That was the example for Phil. So what if we got to close here? Right about there at 92.50. That would give me $100 worth of profit potential. It would put me above trouble. It would give me room to targets. Now here's where they're messing with me. 3, 2, 1. That's not enough. They're probably going to go without me. Those 1-to-1s are my flaw in the slaw, if you will. We'll see. Did anybody watch golf this weekend? Anybody watch baseball? Anybody watch football? Anybody watch soccer? Formula One. Nice. Sergio, are you a better driver because you watch Formula One? Victor, are you a better football player because you watch college football? Ohio and Indiana? No. How do you get better at something, guys? By doing, by practicing, by getting coaching, by getting feedback. Nobody ever sat on the sidelines and got better at something. Love the process. I watch golf. You know what? Next time I go golf, I'm probably still going to suck. But I'm going to keep practicing. I'm going to keep trying. I'm going to keep pushing. If you're watching my classroom and expecting to become a better trader, that's not the path, guys. If you're not taking pictures and posting them in a room, you are forfeiting the most valuable part about the Nexgen education experience. The indicators are amazing. It's the greatest software in the world. There's the lesson. They always show up, don't they, Claire? This is the greatest software in the world. You know exactly where the market's is most likely to stop, right? You have patterns to keep you from taking trades into trouble. You have a methodology that you can prove wins more than it loses. You just got to learn to use it. You need to use the coaching, guys. You need to be in tune with those advantages. Remember when I said that's probably the one that's going? Victor, do you see it? White bar, open above the HVA, from trouble. We go into 25? I don't know. We got some stuff in the way. With odds favorable momentum, that zone right there is my line in the sand. Victor, do you notice that you didn't get that pattern until right here? Nice, Jerry. That it didn't give you. But Jerry, you're in it at 2704. Why not all the way down here at 95? Why trade in the middle of something that could stop the market instead of trading towards something that could stop the market? Maybe you're on Rinko. Maybe it's different. Oh, 04. No. Waited to get past your small triggers? Are your small triggers different than mine? That's it. That's your entry signal. It was tight into the 1-to-1s. That is your rules-based 100% entry signal. An up bar that closes above the small triggers. Got it late? You waited for the next bar, right? You waited for the next bar to close, thinking it created an advantage, when all it did is it put you directly into nonsense, Jerry. These are the things that if you guys post in my room, we talk about the whys and we offer correction. Created a false sense of security, didn't it? But the reality is it puts you directly into trouble. And now you've got to sit through this giant bounce and hope that area breaks if you didn't get paid at the one-to-ones. I'm rooting for you 100%. Great entries create manageable trades. Great entries reduce risk. If you don't take the time to learn the basics and to trust the basics, trading becomes more difficult. The pink line scared you? All right. High volume area, right? No, it's okay. These are the things you got to talk about. What direction is we're up, right? We're above trouble. This pink line, Jerry, means precisely jack squat, unless you're coming from a termination condition. That's what the pink line's for. The one-to-ones, I'll give you the one-to-ones, right? But by getting above an area that could stop the market, how did it serve you trading directly into an area that could stop the market? Which one's got the least amount of risk? Because where the market shouldn't go is below the pivot low, no matter where you get in during that move. Does that make sense? So if you knew you were going to trade into trouble anyway, why not do it to the lower trouble with less risk? And sure enough, boom, boom, boom. I love this. Same thing every day. Just jumping in, Victor. Right into trouble. Right into trouble. You say small profit. Got in after it cleared the area. That's not clearing the area. That's prairie dogging. Right above. I'm glad it went to the one-to-ones for you. I'm glad it went to the one-to-ones for you. So this is a great example. Perceived safety. It's not. Just shorten the room, right? Perceived safety. It's not. It just shortened the distance. Look at that. That area wasn't broken. Sure. So what is the pink line, Jerry? The pink line is a high volume area based off of one bar, right? So let's do this real quick. That pink line is the highest concentration of sellers in a down breakout bar. That's all it is. Does that make sense, everybody? Those of you studying HVA, that's all it is. So if this chart is up, if the large chart is up, if it has room to trouble, what are the chances of that pink line stopping everything the 15-minute says is likely to happen? It's pretty smart, pretty small, right? Yeah, no worries. So when we talk about areas that stop the market, think of the areas that can stop the market as the same thing that can produce a trade, right, Jerry? So we're looking for a zone. We're looking for one-to-ones. We're looking for, I don't see a mid-band. We're looking for mid-bands, right? So wherever a trade can originate. Why? Because trades originate from areas because areas create bounces. That's it. So whether it's a bounce up or a bounce down, that's why the large chart leads the way. And then Victor, still up, right? Top of the zone, there's a zone, close above puts you in right into trouble. And John Novak gave me that lesson And he goes, Mark, if the large chart doesn't agree, ignore the lines. Ignore the green lines if the large chart doesn't agree. Ignore the pink lines if the large chart doesn't agree. Because if this is up, your highest concentration of buyers, that spot is very key when the market pulls back to it. But this is just where the sellers gave it a shot. And you see how everything's set up over here? And what did it do? Yeah, it stutters, but ultimately it breaks. That's a good lesson. Thank you for that. Like, that's a solid lesson. It's easy to let things talk you out of a trade. Have 27 seconds. That's the top of my zone, which means I need to be above 1-to-1s, above the small triggers, above the dashed line, and then from like 83, I've got 3 points to get to a mid-band. Awesome. Jerry, I don't know why people are hesitant to speak out in the room, and I'm not calling you out for it. I know it's difficult. I haven't stopped learning since the first day I looked at the software. Guys, there's always something to learn. And when you guys tell me what's on your mind or tell me what kept you out, there's usually great lessons. I spent my first year with Nexgen having John Novak explain why things weren't supposed to be keeping me out of trades, why one divergence on a small chart wasn't a reason not to take a trade, while, you know, why just a 1-to-1 wasn't a reason. Area on the large chart match the pink one on the small chart? Sometimes. Yeah, pretty close, right? Top of the zone, small swing 1-to-1s. Did you guys notice that the market tried to break the divergence high? Couldn't open or close above it, couldn't open or close above it, couldn't open or close above it. What does that say about that divergence high to you guys? Is that a red flag to anybody with any sort of history on minute bars? Tried and failed, tried and failed, tried and failed, triggers trying to roll. In the way, in the way, in the way, in the way. Guys, let's be honest. What's the likelihood this market's going to ramp up and run forever? Would you say it has a better chance of breaking below here and changing direction than it does just arbitrarily going up through 5 layers of trouble and a pivot stop out? But Mark, it has to go up. Doesn't have to. It could. And it might. And it might. There's your close above, Victor. Mid band's in the way, 1-to-1's in the way, no room to the area. And Claire, if the market runs up to the next zone from here, these will have never turned down. Does that make sense? If the market goes up from right here and ends up here, they would have never turned down. This is kind of like what we saw earlier. We've got 13.5 minutes until we know definitively whether they are up or down. So if we can't decide direction here, does odds favorable momentum down at least deter us from trying the long? Uh-oh, did we just add a layer? If I can't decide whether they want to go up or down, but this is odds favorable momentum down, are longs my best bet? You thought it would go down, but could not take it. Could not, Boaz, or chose not to? Thought it would go down, directly into a termination, divergence from the 1-to-1, from the fib, none of the triggers broken. Yeah, I gave you a little push, right? Look what it's doing, Boaz. How do you feel about your decision right now? Feeling pretty good, right? Feeling like you're smarter than the average bear. And you are. You just followed rules, and it kept you out of a loser. or at least a break even. And it still might go down. I don't know. I just don't know. I think once you can follow a plan, once you can follow very basic rules, once you can make money the easy way, that's when really kind of spreading your wings a little bit makes sense. If you feel like you need to, you guys want to help me out with something here just for the new people? Has anyone followed the plan, made money, and thought to themselves, well, that's not enough money? That's not enough money. I need more trades. I mean, I give it all back because I break rules, but I need to find more. I need to try more. I need to do more. I need to try to figure out how to catch every tick in the market and then just blow out, and then you go back to simple and it works again. And then you blow out, and then you go back to simple and it works again. And then you blow out, and then you go back to simple and it works again. Am I the only one that keeps ditching what works because I feel like I need more? Fib, no go, haha. Amen. Looks great on this chart, doesn't it, Morgan? Divergence from a fib and a 1-to-1. No way. Couldn't make me. Not my money. Not my trade. Guys, we've all done it. We've all done it. I'm going to end today's broadcast.